So good afternoon, everybody. Thank you for joining us today. We're running this session today really to coincide with the release of our annual student accommodation reports. That's coming out today, so we'll make sure those attending the call today receive a copy this afternoon. A few pieces of admin before we get started. So there is a Q&A function within Zoom, so you should see that if you hover over the Zoom window. I do kind of hope some of you put forward some questions. So it's a good opportunity to do so. We'll try and get around to as many of those as possible at the end of the presentation. But for any of those that we cannot, we'll be in contact and obviously get back to you. It's also worth noting we are recording today's session. So after the webinar is finished, we'll make sure that is available again to any attendees. For those not familiar with StuRents, we'll give you a very quick introduction before we get started with the data. So StuRents is the UK's largest student accommodation ecosystem. We have three distinct arms to the business. We have StuRents.com, which is the UK's largest student accommodation platform. We list well over 700,000 beds across the UK, and that's a mixture of both HMO and PBSA accommodation. We also have our industry-leading property management software. That's been built in-house by our own software engineers, and that's being utilised again by both HMO and PBSA participants. And then we have research and data, and here we are uniquely positioned to leverage our marketing and operational platforms to provide highly granular data to a whole range of industry stakeholders. So we'll start off with a quick recap with regards to COVID before we get into some of the other data sets. I think to start on a positive note, what we've definitely seen throughout the course of the last 18 months really is still a lot of very positive numbers coming from the likes of UCAS as an example. Figure 1 highlights the latest letting or full cycle numbers released by UCAS, and we can really see that growth in acceptances across the board was up, which is obviously very positive for the long-term health of the industry. In terms of kind of demographic trends, one that gets reported quite often is the rise in 18-year-olds. So we're coming out of this demographic dip, and obviously going forward, they're going to be an increasing number of 18-year-olds in the UK. That is also benefiting the markets because we're seeing an increasing participation rate as well, which again is very positive from particularly from a UK domestic growth perspective. And the government still does have in place policies to essentially increase the recruitment of international students. And they've set a target there of 600,000 internationals annually by 2030, which is a pretty significant uplift to where we are today. But again, all very positive from a demand growth perspective. Looking at the kind of the reality of the situation though, particularly when COVID hit in 2020 around March, April time, what we did see was a disconnect between what was being reported in the press, particularly when it comes to UCAS numbers, and the reality on the ground. So again, whilst the UCAS numbers for 2020 were very positive from a long-term perspective, they really did not translate to heads on beds, essentially. What we have looked at instead, for example, is the issuance of Tier 4 visas, and in particular those to Chinese students. We can see that in figure 2, there was a significant drop-off in those being issued to Chinese students for the 12-month period up to 2020. And we're seeing there, a decline of about 65% year on year. So a pretty significant fall. And that much more accurately reflects what was actually happening on the ground. So whilst, again, UCAS numbers were very positive, particularly acceptances from non-EU students, the reality is they just were not prepared to travel or could not travel, and therefore we saw that drop in visas being issued. More positively, for the 9-month period up to June, which is the latest data that's currently available, we have seen that rebound. So we're looking at a significant year-on-year increase, up 178%, as I say, for the period ending June. So it's going to be very interesting to see how those numbers evolve over the months ahead, and that's something we'll be keeping a close eye on. Now, the very latest data available from UCAS, and that data set was released essentially 28 days after A-level results, again was very positive. So we saw UK numbers up, so 1.4%, non-EU up 5.2%. So again, very positive from a long-term perspective. However, what we did see was a dramatic decline in the number of acceptances from EU students. And that's obviously primarily related to the loss of home fee status for those particular students. It's worth noting those numbers will continue to evolve. So UCAS won't release the full cycle data set until early next year. So again, that's something that we'll be keeping a close eye on, and we'll obviously keep you up to date once those numbers are released. So next we can look at how that impacted demand for accommodation. And we've obviously split this out by HMOs and PBSA. So we'll start with the HMO sector. And really what we've seen throughout the pandemic is continued interest and demand for HMO accommodation. Now, figure 3 really highlights this. So this shows two things. The seasonality is the first, and the second is the year-on-year growth in demand. So again, we can see quite easily from the chart that demand growth, or the number of inquiries we are seeing for HMO accommodation, was up year on year. So again, very positive. And that's really off the back of record domestic demand. But equally, you can see the seasonality was not impacted at all, really. So the majority of domestic students are house hunting, inquiring and booking their accommodation relatively early in the letting cycle. And you can see a peak there of November. And that was really reflected in HMO operators' performance. So, we speak to operators all day, every day. And, there are some operators in the market that were fully let by Christmas, for example, in the HMO sector. So very positive from a demand growth perspective and a lettings perspective. Now, that was in stark contrast, really, to the PBSA market. And figure 4 is obviously looking at over the same period, and we've isolated actually international inquiries for PBSA. And really, there's a few kind of key takeaways we can draw from the chart. So one is how late the season was. So for 2021, we can really see that it took a good 6 months or so for the PBSA market, and in particular demand from internationals, to really start to ramp up. And obviously over the last 3 months or 4 months or so, we have seen that increase, which is obviously positive, but it's been a very late letting cycle, essentially. Now, in terms of what the impact was in the previous year, and this is where it differs greatly to the HMO market, when COVID struck March, April time in 2020, obviously a lot of PBSA operators were rightly concerned that internationals were perhaps not travelling to the UK, and perhaps decided to try and attract domestic students to fill those gaps. Now, that is obviously a sensible strategy. The problem with it, though, if we're looking at figure 3 compared to figure 4, is that by March and April, essentially the domestic market largely has booked their accommodation. Now, obviously that had a big impact for particular operators and particular locations, and obviously of the listed players, and we obviously have the 3 on this particular slide, they're all impacted by that essentially decline in internationals and the fact that the UK market largely had essentially booked their accommodation by then. What will be interesting to see in the months ahead, as we've already touched on the previous slide, is whether this increase in bookings and inquiries is reflected in the visas that are being issued. So again, we'll be keeping a close eye on that as well. In terms of longer term growth, it's still very much the case that demand has been skewed towards the more prestigious or the higher tariff universities. So figure 5, we can see we've plotted there the number of yearly acceptances between the 3 categories that UCAS provide. So we have higher, medium and lower. And quite clearly, you can see that between 2012 and 2021, growth in acceptances at higher tariff providers has been very, very strong, whereas at medium and lower, it's obviously less so. In terms of numbers, obviously we can see there that in 2021, we have nearly 44% more acceptances at higher tariff providers. Medium are up as well, nearly 17%, but somewhat concerning, lower tariff providers have actually declined. So we're seeing a 7.7% reduction in yearly acceptances this year versus 2012 for lower tariff providers. If we isolate demand or acceptances from internationals, that trend is even starker. So figure 6 is essentially looking at the same data, but isolating acceptances from non-EU students, i.e. internationals. And really you can see there that higher tariff providers have been running away from the market. They are increasingly capturing an ever larger proportion of acceptances, and obviously that's reflected in the charts. And really that comes down to this trend where students are essentially looking for value out of their courses. But that was very much the case prior to COVID, and it's reflected in the latest HESA numbers, which go up to 2019. If we were to isolate, for example, the number of full-time students at Russell Group universities, those are up just over 25%, whereas all other institutions are up just under 13. So again, a big divergence between the best performing and the worst performing institutions. And that's a trend we think will continue to play out. If we take a bit more time and actually look at the international cohort in a bit more detail, obviously appreciate there are some HMO operators as well as PBSA on this call, so this is going to be more focused towards PBSA. But what we can quite clearly see is how vital the Chinese cohort is to the PBSA market. So figure 7, again, looking at acceptances reported by UCAS, we've essentially highlighted the top few there, and Chinese students quite clearly are representing the bulk of that. If we're looking at, again, numbers for 2021, we can see that acceptances by Chinese based students are 14.6% of the total. So a pretty significant proportion there. And again, long-term growth has been very much skewed to to Chinese students. We can see a significant increase between 2012 and 2021. Now, obviously, Indian students are gaining traction, and we obviously are seeing some, pretty significant year-on-year rises in the number of, again, acceptances as well as the number of full-time students that are coming from India. But what we thought is worth pointing out is figure 8, and figure 8 is looking at the gross national income per capita, either based in China or India. And really what this is highlighting is that whilst, again, demand from Indian students is increasing, which no doubt is a positive for the sector as a whole, the number of affluent Indian students is expected to be much lower than their Chinese counterparts. So there will be obviously some that have a relatively high budgets, but the number of those is going to be comparatively small compared to the Chinese population. In terms of Chinese students, again, at the moment, it's very positive, and obviously the PBSA market has been a big beneficiary of the rise in Chinese students, but it's not without risks. A few points that are worth mentioning. So one is obviously the increasing quantity and quality of Chinese-based institutions, and that's something that we've actually looked at in the annual report, which again we'll send later today. The second is essentially a declining population in China. Now, that's obviously the total, but equally it's the decline in the youth population. So again, that's something that's worth bearing in mind. And really that's also playing out because we're seeing the pace of growth in the number of Chinese students being sent overseas is starting to decline compared to historic levels. So whilst it's still positive now, which is very supportive of the industry as a whole, again, that's something that's worth keeping an eye on in the long run. What we're now looking at is essentially affordability, which is a big kind of topic that we're very keen to kind of explore, and we obviously have a lot of data behind this topic because as a marketing platform, we're seeing a lot of students searching on StuRents. And what we've seen for this year is budgets have continued to increase, which again is very supportive for the sector. However, the pace of growth has certainly slowed. So for 2021, we saw the average budget increase year on year by about 4.7%. So still very positive, but obviously lower than the previous year. And figure 9 really highlights that long-term trend. So figure 9 is showing the long-term upward trend in search budgets. There are obviously some seasonal fluctuations there, which we've highlighted, and naturally you would expect domestic students, which typically house hunt earlier, to have a lower budget than, for example, their international cohort. In terms of what we've seen for the last 12 months, so as a monthly average throughout the last letting cycle, it fluctuated really between £129 and £146 per person per week. So that is essentially the average budget that a student is setting when they're house hunting on the platform. Now, if we compare that to HMO and PBSA rents, the average PBSA, we're looking at headline rents about £176 per person per week, whereas the average HMO, again, headline rent about 118. So a pretty big gap there. And what is obvious straight away is that the average PBSA rent is above the average budget, whereas the HMO market is essentially the reverse. And really what COVID has done is really highlighted that premium. Figure 10, we've isolated a few locations there, but you can see in some certain towns and cities, the price difference from a per person per week perspective, which is typically how students will be house hunting, can be significant. In some cases, it's over £100 per person per week, which is a very big difference. And other locations, it's obviously a lot tighter in terms of that spread. But what we've seen, I mean, cities, for example, like Coventry have been a good example of this, which has been hit particularly hard by COVID because of, again, difficulties with internationals coming to the UK. And we've seen private PBSA schemes in, again, cities like Coventry, reducing their cluster ensuite prices by 20 to 30% year on year, which is a very significant reduction. And obviously that is in basically directly related to the fact that these PBSA schemes need to attract domestic students. And if the spread between HMOs and PBSA is too high, they need to bring that spread down, which is why we obviously saw, again, some significant reductions. But it is worth noting, we have seen a lot of incentives this year as well. We've seen cashback incentives of over £700 per tenant, for example, which can easily equate to a 10% reduction in rents. So again, even sometimes the headline rents don't necessarily give you a full picture in terms of what essentially the economics of that room have been this year versus last year. In terms of what the PBSA market can do to address that, there are various things. I mean, again, as a marketing business, we obviously have a lot of domestic groups that are essentially searching and trying to book their accommodation. And in those cases, PBSA operators have an opportunity to essentially pass on the lower cost of acquisition that is related to a single student that is potentially booking an entire cluster. And that might be in the form of lower rents, for example, and that could potentially make that PBSA more attractive from a price perspective. Equally, other things, again, we see HMOs very much advertised towards groups of students, whereas historically that's not necessarily been the case for the PBSA sector, which typically promotes individual rooms to individual tenants. So there's a few things there that the PBSA market could potentially do to try and appear more attractive to domestic students. Going into a bit more detail now in terms of the price difference between HMOs and PBSA. And again, we're talking kind of broad trends here, so it will very much depend on the individual scheme and location. But what we have seen for 2021 is an average inquired price of £125 per person per week for average HMO. As we saw previously, that was below the average budget in that particular case, and that sits below the average maintenance loan as well. So whilst the figures haven't technically been released yet for 2021, we're estimating the average maintenance loan in the UK to be about £138. And that's a key consideration for domestic students. And what is clear there is that for the most part, the maintenance loan will more than cover the cost of a HMO room, essentially, with a little bit left over for living expenses. Clearly, that's not necessarily the case for the PBSA market, which, again, can be an issue for domestic students to overcome. Figure 11 as well, what we're highlighting there is the distribution of inquiries for HMOs, and that's reflected by the gold or yellow line, or bars, I should say. And we've compared that to the distribution of PBSA supply. Now, again, there's a range of price points there and a range of what students are searching for. And what you can quite clearly see is that PBSA that is priced, and we've taken 160 here, but PBSA that's priced at 160 and above arguably has a significant exposure to international students. There are relatively few domestic students that are prepared to pay that much. And clearly for PBSA at that price point, it needs to draw off Chinese demand and international demand to ensure decent levels of occupancy. And whilst you can see that there are a very healthy level of inquiries for HMOs up to about 130, once you start to get beyond that price point, there are, again, comparatively few there. But interestingly, there is an overlap. So you do see that there is some PBSA supply that is priced at a comparable level to HMOs and where HMOs are being inquired for. So really the ability to attract domestic students to a particular PBSA scheme will be very much dependent on the individual price of that scheme, the underlying HMO market in that location, which again does vary pretty significantly. Figure 12, we've isolated HMOs in a bit more detail. So this time we are again plotting the distribution of inquiries versus the distribution of HMO supply. And really the key takeaway from that particular chart is that whilst there is a substantial proportion of HMO that is priced between 100, 110, 120, there is a peak or demand peaks about 120, 130. So what that tells us is that students are willing to pay a premium for the best quality HMOs. And also there is a potential undersupply there and a potential oversupply at the lower price points. And again, that is positive for the industry. And I think we will see more interest in the HMO market because of those broader trends. If we look at planning application activity over the last 12 months and beyond as well, so we have seen planning application activity slow steadily over the last few years, and that's highlighted in figure 13. So it really peaked in 2016, and since then it has been slowly declining. Looking at some of the figures there, so for Q2 this year, for example, we saw just under 5,800 beds submitted and just over 2,000 approved, and that is down significantly compared to previous years. But that is very much a broad national trend. There are certain towns and cities where the reverse is playing out. Nottingham is a key example of that, where we've seen a significant amount of planning application activity in the city. And if we look at Q2, for example, this year, we saw more than 3,200 beds added in an individual quarter, which is pretty significant. And Nottingham now has essentially the largest pipeline outside of London. So again, whilst the national trend points to a slowdown, that's not necessarily the case for every location. So again, any stakeholder needs to be aware of the underlying conditions in a particular market. But what we've also seen is some of the earlier moving cities have not really seen an uptick in planning application activity. So if we think about places like Durham and Newcastle, which were relatively early moving markets in terms of new PBSA coming online, what we really saw in those cities is an influx in PBSA. Arguably, it becomes saturated, and obviously developers and investors move on to other locations. Now, in the case of Durham and Newcastle, obviously they have reputable universities. Demand has continued to grow, but we've not seen that matched by any increase in planning application activity. So I think there really where the opportunity potentially lies is for investors that can look beyond today and look 2-3 years out when a new scheme may be delivered. The fundamentals could actually be very attractive again. So it's really just trying to get ahead of the curve and foresee those changes to fundamentals that could present some interesting opportunities. To highlight supply growth, and we'll look at this from both a PBSA and HMO perspective. So currently the pipeline for PBSA stands at about 118,000 beds. Just over 60% of those are approved. But in terms of beds being delivered, it's definitely slowed over the last few years. So in 2019, we saw just over 37,000 beds added to the industry. 2020 that came down, and this year it's again fallen slightly. That's partly related to COVID, but also related to this general slowdown in planning application activity. But again, it's worth reiterating that does vary significantly per location. So if we look at figure 15, for example, we've looked at the pipeline versus the existing supply in that location, and now Nottingham is top essentially, has the potential to increase its supply by almost 40% if all the schemes get delivered. Whereas we compare, as I said, to places like Newcastle and Durham, it's obviously much lower there because it has a much lower pipeline. In terms of going forward as well, it's been well reported that the costs associated with construction have gone up pretty dramatically. We would foresee that restricting some of the new supply coming online. So whilst there is potential for significant increases, again, we would question whether all those schemes will be delivered, and arguably they will not, which will be positive for the most part. But what is worth just spending a minute on as well is looking at historically how the market has analysed changes to supply and demand. The student to bed ratio is a particular metric that the market has relied on historically, and in simplistic terms, what the sector has done there is looked at growth or the number of students in a particular city and compared that to the number of PBSA beds to determine whether that market is under or oversupplied. Now, the reality is if you run that calculation, every location nationally will appear undersupplied, and I think we can pretty much all agree that's not true. There are some locations where it is, but it's not some locations where that's certainly not the case. And I think that's really caused this influx in PBSA investment and development, and that's not always been matched by demand. So we have seen certain locations that, again, have arguably become oversupplied with PBSA. In this particular case, we picked out Sheffield, which I think it's well reported is a challenged market. There are various ways that we can look at supply and demand for our customers. This is just one example of that. And in this particular example, if you are to look at, for example, the student to bed ratio in Sheffield, it will still appear positive. So it will still appear around 1.6 students for every PBSA bed. So on paper, that market may appear undersupplied. However, the reality is very different. And what we have essentially done in figure 16 is looked at the change in demand over time versus the change in supply over time. And when you run that kind of analysis, it's quite clear that demand growth has far outstripped supply growth. The other way around, supply growth has far outstripped demand growth. And that really has created some challenging fundamentals in a location like Sheffield, whereas a location like Nottingham, it's been the reverse of that. So there are various ways we can look at supply and demand, but again, we would argue something like the student to bed ratio is probably not up to speed anymore. Looking at HMO growth, we've already touched on how metrics like the student to bed ratio can essentially exaggerate the addressable market for PBSA. And it's worth noting that the HMO market is still providing the majority of beds to the sector or to students. If we're looking at the numbers at national level, we're talking well over half of all beds are essentially HMO beds. But if you isolate just private accommodation, that figure increases to about 70% or just over 70%. So a significant proportion, as I said, of the beds in the market are HMO beds. And we've already touched on some of the kind of broader trends. So 18-year-olds are rising, participation rates increasing, and that's very attractive from a owning HMO perspective. And we're seeing increased appetite from institutional investors to gain exposure to the HMO market. It's not always easy. Obviously, where it differs to the PBSA sector is that it's difficult to achieve scale at speed. It's not impossible, and there are various customers that have managed to do that. But again, it's slightly more challenging compared to the PBSA market. In terms of other assumptions that are worth touching on, so we've already mentioned the high reliance on the HMO market in terms of meeting demand and providing accommodation to students. But one point that I thought was worth just spending a few moments on is this assumption that the HMO market is static or declining. Now, again, this will vary per location. So we've taken Nottingham as an example, but again, this does vary. And really, there is a general assumption in the market, as I said, that the HMO sector is declining. Now, I think when you start to look at the reasons behind why that may or may not be the case, that doesn't always hold up. We've already touched on affordability. Most domestic students are relying on maintenance loans. Their budgets are going to be significantly lower than the average international students. So new PBSA coming to the market just simply won't be a financially viable option for a large proportion of domestic students. Domestic students have historically lived in HMOs in their second and third year. I think regardless of what products are being offered from a PBSA perspective, there is always going to be a proportion of domestic students that almost see it as a rite of passage to essentially live in a house with their mates rather than something that's perhaps more institutional. And then from a landlord's perspective, we also have to look at the reasons why a HMO landlord may want to sell or quit the market, essentially. I think HMO rents and yields are very attractive. The ability to achieve an equivalent yield in the residential market is not necessarily easy or possible. And location plays another important factor. If you are trying to convert or sell a property and turn it into a broader residential property, perhaps for a family, the appetite to live in a row of HMO houses that are particularly dominated by students will be relatively low. So again, the appetite to convert that HMO arguably is not that strong. And that's really reflected in the numbers. So again, we've looked at Nottingham, and what figure 18 is showing is the number of properties exempt from council tax, and that's primarily because they are occupied solely by students. That has significantly increased since 2015. So we've seen a 62.4% increase during that period. So in the case of Nottingham, the supply of non-PBSA rooms or beds available to students has in fact gone up. It's not stayed static or declined, very much the opposite. But again, that does vary per location. A location, for example, like Plymouth has seen the reverse of that. So in Plymouth, again, the number of non-PBSA properties exempt from council tax has been in decline. But that's really driven by a fall in demand, I believe, rather than necessarily increases in PBSA supply. So again, just worth noting that the HMO market is not necessarily staying still. So to conclude, really what we've discussed on so far, so I think what we can safely say now is that the impact of COVID today is definitely less severe than it was at the start of the pandemic. And demand growth remains strong. As I've already said a few times, this rise in 18-year-olds is very much positive, but we really would see the big beneficiary of that being the HMO market. And obviously the HMO market and domestic students in particular are very price sensitive and heavily reliant on maintenance loans. So again, the ability for a PBSA operator to attract domestic students will very much depend on the price as well as the underlying HMO market. And really that has led to, in some cases, an exaggeration of the addressable market for PBSA. But again, that will vary per location. And where we have seen a saturation in PBSA, we've definitely seen the spreads between HMOs and PBSA narrow. An example of that is Newcastle, for example, where you can now book a PBSA room for less than £100 per person per week. And again, that's in response to essentially international demand not being strong enough and PBSA having to go after domestic demand. In terms of demand growth, again, we've touched on, longer term, it is still very positive, whether that's UK or internationals. But I think what is fair to say is that the PBSA market on its own, particularly with new schemes having to be priced at a particular level to make them viable, are unlikely to meet all of that demand. And really what the sector needs is a range of price points. And HMOs obviously can accommodate the lower end of that for the most parts. But obviously PBSA is going to struggle to meet all of that demand just because of the high price points. And really what that could mean for domestic students is almost a squeeze of affordable accommodation. And that's simply supply and demand driven. If we are seeing an increase in demand, yet relevant supply is perhaps not increasing at the required rate, then we could see a squeeze for domestic students. Positively for the PBSA market, the slowdown in planning that we've touched on is good, whether that's for existing operators, which are perhaps seeing fewer new schemes come to market, or perhaps generally just trying to get a new scheme and obviously have less competition going forward. And that is obviously, again, benefiting from an increase in international demand. However, the key kind of takeaway really is that every location is very different. And really what any stakeholder needs to be aware of is ensuring that new supply that's perhaps coming online is meeting a specific need. And in some cases that has been the case, and in others it is not. And obviously in the latter, we obviously see those markets becoming more challenging. But I think on the whole, the outlook is still very positive, whether that's because of the demand growth, there's all the slowdown in planning. But again, investors and stakeholders just need to be wary of those locations where perhaps there's a disconnect. So appreciate your time today. I think what we'll do now is have a look through some of the questions. Appreciate we probably won't have time to answer all of them, but we'll try and go through some of the key ones that we've seen so far come in. So let's take a few of these. Yeah, in terms of kind of rental growth over the long term, we've definitely seen, if we look at the last 3 or 4 years, rental growth in the HMO market has been stronger than the PBSA sector. Again, I think whether that will continue is up for debate. I think HMO market will remain very, very strong because of the growth in domestic students and somewhat limited supply growth. But I think for the next few years, we'll probably see HMOs outperforming PBSA. Another question that is worth touching on is the impact of legislation. So one that has been reported on recently in the press is this potential reduction in the graduate repayment threshold. That's not confirmed as of yet, but that could potentially impact particularly demand in the sector. And really what we would see there is probably a continuation of the current trend. For those not familiar, essentially the government is proposing reducing the threshold that graduates repay their student loans. Essentially that makes university more expensive for those students that would otherwise see a large portion of the loan written off. So in that particular case, it's likely that that's going to impact perhaps lower tariff universities or those that have less positive graduate outcomes in terms of salaries. But again, that's something we have to keep a close eye on to see how that develops and whether that legislation actually comes in or not. I think that's it from a question perspective. As I said, what we'll do, appreciate everyone's time today. We'll follow up with any additional questions users may have entered. But yeah, thank you very much for your time and have a good afternoon.